I think more than ever in today's social media hustle culture, we can all agree like 98% of it is just absolute BS. I wish people would show a little more of the real side, than just this I'm hustle and grind and perfect 24/7. Because if you don't open yourself up to the possibility, you'll never get there. It's like they say, shoot for the stars. Even if you fail, you land on the moon. If you aim at the moon, you fall short. You're never gonna make it there. So I think it's just knowing that you are capable of it. I tell everyone, I'm like,
what's up, everybody, and welcome back to the Abundant Journey podcast. As always, I'm your host, Nick James, with Nick Offenkamp. We got a special guest lined up today, John Lindsey Self Storage. Before I bring you in, John, there's something I'm realizing, Nick. We got a lot of people from Florida on our podcast, and John has become a Florida guy recently. But John, I won't steal your thunder. So how are you, man? Thanks for hanging out with us.
Man, thanks for having me today. Pumped to be here. It is a beautiful day in sunny Florida. 95 and sunny, nothing to complain about.
Making me so jealous. I can see why so many of our guests seem to end up in Florida. They do well in business, and then they move to paradise. So Nick, maybe one day we'll get there. But John, man, looking at most of the time when I see somebody's title on the screen here, we've got their name. With you, we got Self Storage Jedi Master, which is probably my favorite title that I've seen so far in an interview. I would love to kind of kick this thing off with, at what point in your life did you realize you were going to become a self-storage Jedi Master?
Well, great question. So I'll give you a real quick background on the family and where we're at today, and hopefully that helps shed some light on it.
Perfect.
I grew up around the storage business, whether I liked it or not. My dad was a developer, started building storage in 1969. So I grew up pouring concrete and running sites and sweeping units, just what every middle schooler and high schooler wants to do on their summer break. And
100%.
was coming through college, and my dad was a bit older, and he was, kind of down to doing a site a year, just keeping up the business. And he's like, John, do you want to, take over the construction business and build sites? And I was like, no, absolutely not. Construction for me was like watching paint dry growing up. And it wasn't where my heart and soul was, but I had learned so much from my dad, and I wanted to continue in the space because I saw how successful some of his peers were and everything that's going on. And so I said, well, I think I want to start a brokerage company. And I was like, I've learned a lot. It was at that point in time, it was low barrier to entry. Now there's dozens of firms in the space. But, and so I started brokering deals in 2012. I remember I sold my first site the same month I graduated college, and fast forward 14 years, and we've grown our team exponentially. We now do deals all over the U.S., Europe, Southeast Asia, and Latin America.
Wow.
I've sat on the National Board of Directors of Storage Association, published a book, ran different state associations, gotten legislative work passed. We've traded hundreds of storage assets across the world. You name it. I mean, this is our bread and butter. It's what I do every day, and I absolutely love it.
That is awesome, man.
Dude, it's fantastic. Now, I'm curious, as I'm sure you've had other people ask you before, but, 60s, 70s, those are like the OG self-storage guys when storage wasn't flashy. Nobody knew anything about it. What got your dad into it? Because, you grew up around it.
Yeah. So I remember my dad told me in 69, he had a client that had done one my dad was in Dallas at the time, which was, there's a big battle of the origin story of storage. Was it Florida or Texas? But one of my dad's commercial real estate clients is doing storage. And he's like, Bill, you should build it. Because my dad didn't know what to do with this piece of land another one of his clients had. So my dad threw up his first units in 69 and worked real well. And my dad had one main business partner. They built a chain of stores out throughout Texas in the 80s and 90s, really. We moved to North Carolina in 1990. He built another chain of stores here. So I grew up around it. That was the childhood dinner conversation. So, I mean, I really didn't think anything of it. And I was just so enamored by my dad growing up. I was like, I want to do what dad does and stuff. But I just knew I never wanted to be solely in the construction side. We still do construction, and it's certainly a piece of our puzzle, but it's not my core focus. And I don't think it'll ever be. It's I have the attention span of a goldfish, and building's just not for me.
Sure. Well, and originally, self-storage was viewed as like a land banking strategy, right? I mean, people were seeing it as, okay, I'll put up some storage units, make a little bit of profit here, and then eventually I'll turn it into a strip mall or development or something like that. I mean, is that still the mindset that some people take as you're brokering deals, or is pretty much everything that you're seeing in self-storage for the sake of self-storage long term?
Yeah, I'd say 99% of deals we do are for the sake of storage. I mean, it's just become such a main street asset now. It certainly used to be a land bank deal. I'd say I've maybe seen in the past 14 years of my career, maybe one or two deals that were bought for land purposes and the storage facility was torn down. One that comes top of my mind is in downtown Nashville. A group bought an existing storage facility and paid like $500 a foot for it, which is crazy, let alone in Nashville. And they built like a 30-story condo building on it. So, I mean, it's very, very rare. And with the amount of capital and the competitiveness in the landscape today, I don't think anyone's looking for a land bank with these things. They're solely throwing them up to build storage facilities. And it's crazy. I mean, there's just thousands of facilities built every year. I looked at some stats the other day. There's like 4,000 facilities in construction or planning across the U.S., which is an insane number of properties.
And with 14 years now in the business, I mean, you've seen it go from an asset that nobody paid any mind to. I'm sure when you first started out, they're just kind of like, what are these warehouse looking boxes on the side of the street in random spots? To now, I mean, it's one of the hottest, most sought after asset classes in real estate. I'm curious what that experience has been like for you. And as you think back even to 14 years ago, did you see self-storage becoming what it is today? Were you able to anticipate that, or has that growth even surprised you to some degree?
I think I don't think I was able to anticipate it. If I would have been able to, I would have bought a lot more storage in 2013 and 2014. Sure. That's for sure. That's like being like, I wish I would have bought NVIDIA 2 years ago, but you know, we can't all be the Nancy Pelosi's of the storage world here. So, you know, look, I think we saw the trend and we're a party to it, but I don't know, when you're along for the ride, it's just tough to see it. And I knew we were having a good market in 20 and 21 with COVID. I mean, and you know, to give you a little background, like coming out of the global financial crisis, 12, 13, 14, some of the wildest deals we've sold, we were selling stuff at 10, 11, 12 caps, like couldn't give away certain deals. I mean, stuff that we would dream of today, but people were so financially and emotionally hurt from, you know, 07, 08, 09 that like commercial real estate was just not on everyone's radar. You know, through that, we saw this huge upswing in the asset class, you know, 15, 16, 17, started to get some more, you know, high net worth, private equity fund, you know, interest in the space. You know, but again, we were pumped. We're coming out of the global financial crisis. The economy's doing well. We had some good market trends, you know, and then COVID hit, and it's like someone just threw a gasoline can on a match, man, just overnight. And not only from a development side, but from an acquisition side. I mean, some of the prices and cap rates you saw were just astronomical, and we were just trying to keep up with it. I mean, it was just bananas there for a couple of years. And then I remember like second half of 22, beginning of 23, it's like someone turned on the lights. Like, you know, we saw those two back-to-back 75 bip rate hikes. And then just like overnight, like it was like a screeching halt almost from the transaction side. And to give you an example, we closed 34 deals last year. 30 of those were closed before August 1st. So like the music stopped, lights came on, time for everyone to go home. I mean, PE firms just stopped placing money. They're like, sorry guys, debt's up 400 bips. We're just going to pause. We're not used to this and digest. And I think it was the first time that me and my team really got to sit back and be like, wow, what a wild ride we've had for the past couple of years. And now it's plateaued out and we're back to grooving this year and things are good. But Q3, Q4 of last year and Q1 of this year was the slowest time I've seen in probably the last 5 or 6 years. And I think everyone was waiting for a looming rate cut. That Fed kept kicking one quarter down the road. And now Jerome was like, hey, it's not going to be till January of next year. And, you know, a lot of these PE firms were like, shoot, we got to place capital. we just got to figure out how to do deals in today's environment. So they finally like bellied up and made that happen. And on the flip side, sellers realized they stopped getting phone calls 10 times a week like they did during the peak of COVID. So there's this happy medium in the space now where sellers are ready to sell, buyers need to place capital, and we're just seeing like a ton of volume. And actually for the first time, I'd say like really reasonably priced deals that we haven't seen since 2019, 2018 or so. So it's been a wild ride. And I feel like now also with age is the first time I've really appreciated like this last decade in the space and how crazy it's been for sure.
Yeah. It's interesting you say that. One of the things that I've learned as a banker, and I have conversations with so many business owners, is business is always changing. You have to adapt. You have to adjust as the market changes. And a lot of times business owners can get caught flat-footed. Curious for you guys, what did that look like as you had to ramp up to meet the demand? Then you had to hit that halt button, and that probably reoriented your day-to-day and your practices and your strategies to, hey, we got to start selling again. How did that adjustment happen for you? And, maybe business owners who are listening and thinking on and saying, hey, just the education that probably you've learned through going through these couple different cycles.
Yep. So a couple things. And, it's interesting. My dad, I mentioned him a couple times already, he was 55 when I was born. So I feel like I was raised in a different generation. Like my dad grew up during Great Depression, like World War II kid. And then, me, I'm like totally millennial generation or so, but it's cool because these stories I heard from him were like, I literally couldn't afford bread. Like I had to kill rabbits to eat, like just crazy stuff that like for us, I'm like, the Chick-fil-A line's too long. I'm going to go home, like, so it's just like, it's
a different world for sure. Yeah.
I grew up in, but I loved it because my dad always told me, he's like, never get over your skis and cash is king. And so like something that we've always tried to really do, like if you can't pay cash for it, you shouldn't buy it. Always have, your reserves built up. And obviously like, look, we love intelligent debt, but my brother and I, he'll be the first to tell we non-recourse debt all the way through. I'd rather see someone put down 30, 40, 50% and take non-recourse than leverage to the teeth and sign their life away on it. And I think through the years, we may not have been able to move as fast in certain things, but we always plan for the what ifs. And I sleep really well at night knowing that there's non-recourse debt. And on a brokerage business and with any business, I tell people just make sure you've got 6 to 12 months of runway. Again, if a restaurant or a store or retail or online, whatever, if for whatever reason your business stopped, which before COVID, we didn't think could really happen, can you float your own expenses for 6 months? What does that actually look like to you? And I think, again, it's not always fun because you want to reinvest and you want to spend and you want to grow and you want to do all these things. But, being conservative like that is what saves you at the end of the day for those crazy days. So cash is king and build those reserves longer and deeper than you think you'll ever need. And I think it's the two best pieces of advice I can give anyone starting a new venture these days.
Love that advice. And I mean, we're seeing that play out in real time, right? Like as rates didn't come down in the way that so many people were hoping, and so many folks did buy a couple of years ago with adjustable rate loan products, and now they're getting hammered with and so I imagine too you're probably starting to see some deals come back to the market because companies that bought facilities can no longer afford them.
It's really interesting on that point. I have some very, very intelligent clients that have been in the space for a long time that took floating debt in 20 and 21, and their 3% loans are now 8 or 9%. And these are groups that have raised, tens and tens and tens of millions of dollars and have been in the space for a long time. Like, it wasn't uneducated decisions. It was just no one could have ever predicted this environment we're in. But, I'm sure you guys have heard this through various groups, so I'm a big believer in like control the controllables. Like, no matter what environment you're in, like lock up your debt, plan for the unplanned. And I think now even like, if you look at the forward SOFR curve, like rates are, on all accounts, should pull in the next 2 years. But I think my largest clients are still locking in rate caps. They're being really conservative because they're just like, you know what? We just saw this. yeah, most likely they're going to go down. But if they hold it this long time or they happen to creep up, the 5 years been down a little bit recently, but who the hell knows? Like we just saw everyone get punched in the chin, like spending an extra 40, 50 grand on a rate cap. Like if that changed your life, you probably shouldn't do the deal in the first place. So I tell people all the time, like just be intelligent, control the things you can and plan for the unplanned. And I think those contingencies in place will make you feel a lot better about your deal. And like you said, help you sleep at night at the end of the day too.
Yeah. Yeah, I love that. I want to kind of shift focus a bit and just talk about the growth of your brokerage. I mean, we talked about how you've certainly seen ebbs and flows in the market and how that's changed things. But the growth that you guys have seen over 14 years just as a brokerage and as a business, that's ridiculous. And especially going international with it. And I'm curious just how you've been presented with different opportunities, how you identify those, how you took this thing from, what it started with to being now a multinational brokerage company.
So it's interesting. I think one, it's been super organic. Like everything has been very like kind of happened to fall in the right place at the right time. Like when I started doing brokerage in 2012, I was 22, coming out of college. I was interested in going out on the weekends with my buddies and this and that. And I was like, oh, great. This is a way for me to pay to, have a life and, life's good and have fun and do something with my dad and whatever. I never was like, oh, I'm going to plan this to be an international self-storage brokerage firm. Like no one's thinking like that, but it was cool. Like we started in North Carolina and then someone's like, hey, I've got this deal over the border in South Carolina. And I'm like, yeah, I'll get my license there. We'll do a deal in South Carolina. And then they're like, oh, I got these deals in Tennessee or Texas. And so it kind of started to naturally evolve from referrals and repeat clients and things start to, grow from there. And then in 2014, 2015, my brother and I started going over to Europe and, touring properties and going to the FEDESA, which is the Federation of European Self-Storage Operators Group. And we started going to their conferences every year. And we were one of the only American groups. Then they started asking us to sit on panels and be a part of that. And then the Asia conference saw that we were doing that in Europe, and they asked us to come be part of that in China. And so then we started going over there, and same with Australia. And so it's just been like one thing has led to another, and it's been awesome. Like we've had so much fun doing it, and like last year we did deals from Marseille, France to Waxahachie, Texas. Like you name it. I mean, it's a very broad spectrum, and like I love it. And like I grew up speaking different languages, and like I love geopolitics and I love traveling, and so it's been just really fun for me to kind of expand that reach and get to go to different countries and see how businesses operate a little differently, and whether it's language and cultural barriers to legal differences and currency trade, and it's just been a wild learning curve. But even like this fall, I'm speaking at a conference in Stockholm. Again, another FEDESA event, which would be great. And so it's just kind of cool to be opened up to all these different cultures and practices. And, the difference between doing a deal in Texas and Florida is not that significant, but it's been really fun to go abroad. And, he's done stuff from Los Mochis, Texas to Ho Chi Minh, Vietnam, and everywhere in between. So we've loved it. I see us continuing to grow outside the US. It's such an emerging market beyond here, but I would say until I got my first taste of going international, I never thought about it. Everything right. Now looking back, it was like, oh wow, this actually makes sense how we got from here to there. And then now I think just being a little older, I can be like, okay, cool. I'm going to reflect on what I did in 12, 14 years. I can probably have that next 10x growth in half the time, because I'm mindful about it now. Whereas in my 20s, it just was like, oh, cool, we're doing some bigger deals and we're moving along and this is growing and that's great. Like we're having fun doing it. But now it's like really intentful growth. Like we're committed to this and this is what we're doing and this is the path. And so, I think it's just an interesting process. I don't think anyone, we all have lofty dreams and ambitions, but I think in your early 20s, especially your reasons for wanting to get certain places are different than when you have kids and a family and you've been through a little bit of life. So it's fun to kind of recalibrate now. like I said, got a 1-year-old for you on the podcast and just kind of see like where this is going in the future and what it holds for us.
Yeah. No, that's good. And I love the journey. I think through, the thought process it would take to start going international. And, a lot of times, man, take this one of two ways, because there's two questions that come to mind. One is, a lot of entrepreneurs have this mindset of, that shiny object syndrome. They tend to want to go and bounce from thing to thing. That hasn't been something that, at least you're sharing, that has been material for you. So curious of your lessons there, but maybe part two to that is, what gets you over the fear to jump into international waters and start looking at doing some storage there? I mean, both of those, I think, have similar thought processes with them.
So I'll tell you, we've been pot committed on storage since the day we started. This is what I spend 98% of my time doing. And I think our deal cycle, it's whale hunting. I mean, I might talk to an owner. Like I'll tell you, I closed a deal with an owner 2 years ago, and I'd been calling them since May of 2012. So it was almost a 10-year sales cycle. And I sent him an email when we closed. I was like, I think I had called him like 117 times over 10 years. I had visited his property like 13 times. I'd take him to X number of dinners and lunches and coffees. And I mean, it's just like, that's what it takes. Like now when you close a $40 million deal, it's worth it, but it's time. Like, and it's, brokers like, oh, I'll get in for a year or two and get out. Like, well, all that foundation you just laid, like you're going to capitalize on it, like just over the hump. Like you gotta stay committed to see the cycle through. So it's a long sales cycle, and it is not for the impatient. Like it can be a grueling grind sometimes. I mean, we've closed a couple deals this year. Like our average deal cycle from the day we sign an listing agreement to close is about 104 days. We've had a couple deals in the past year that have taken like 9-10 months. And there's a lot of ifs if those are going to close along the way. Oh, and that's on top of the 5 to 6 years we've been courting these clients in the first place. Like it can be grueling, and you never know when your next paycheck is. So it's and I would say that about any space. If you stay in any arena for 10 years, you're going to have some fantastic growth. I don't care if you're, like you said, staying in banking or in ministry or wherever you are. Like if you're committed to any skill set for 10 years, you're going to see some amazing growth in yourself and your career. So I tell people it's very easy to jump around, and I think now more than ever is it more like acceptable for people to do that with jobs. But I promise you, like if you stay committed to a practice for a decade, you're going to be wildly successful. Mm-hmm. And I mean, I think half is just hanging around. People see that you're still here after 10 years. They're like, cool. Yeah. Like they're not going anywhere. Like they're here for the ride, and people like that. As far as other verticals, my brother and I have invested in a number of like storage adjacent vehicles, whether it's vendor companies or new ventures. We're invested in AI and healthcare and tech. But again, a lot of it has been super organic, whether it's through, LPs in the storage space we've met, or, friend of friends get introduced. I don't think we've sought out these ventures. It's stuff that's just been kind of right place, right time. And we really like investing in people over product. It's kind of one of our like core things. I'm like, if I can't get behind you and your story, like I don't care how good your product is. And so I think we'll continue to do that over the years. We love to diversify, but storage, and I tell everyone who gets into the space, it's such a generational wealth tool. This is your bat singles and doubles for the rest of your life. You're not hitting 10x home runs, nor do I expect to. This is consistent, clip the coupon, rinse and repeat. Let's do it again every 5 to 7 years. And that's fine. But I think where people get stuck is if they try and treat it like I'm going to 10x my capital in 3 years and get out this wild sale. And you might, but you also might be stuck with the deal for 7 years. So we try and treat this like our singles and doubles, just rinse and repeat. And if we decide to place capital outside of the sector along the way, that's more just for our venture, itch to scratch. But the majority of our own capital is redeployed in the space. I just think it's such a wonderful asset class, and there's such a huge runway in front of us.
Yeah. Picking up on that runway, I mean, a lot of our listeners are folks that they're wanting to get invested, especially in real estate. That's definitely been a focus of the podcast here.
Yep.
But there's a lot of noise out there about self-storage in particular. I mean, you listen to one person and it's all institutional investors that are buying up everything now and all the mom and pop deals are gone. Others are saying, no, you need to call up every self-storage owner in your locale and, you'll eventually hit one. I'm curious just what your take is on that. Is this a space that a relatively unsophisticated kind of first-time investor can still find a place for them in? And if so, what should they be looking at? Or should they just be looking at other assets?
No, look, it's crazy. Every time I feel like the space has been tapped out, I see some guy will call me and be like, yeah, I just closed on the site last week. And I'm like, what? Like, how the hell did you do that? Like, I'm like wildly impressed. Like, I still am shocked every day. I will say it's probably the toughest it's ever been to get in the space. There's, a dozen guys that have started, big podcasts around storage, new venture groups and mastermind groups and double down with the amount of PE capital in the space. And they've had to go into smaller and smaller and smaller deals to place capital because there's so much competition at the Class A level. So what I've told a lot of people getting into the space now, and this is not financial advice by any means, but especially the guys who are like, look, I got 50, 100, 250, looking to make my first jump. Like, I think there are a number of very reputable funds in the space, and I'd recommend kind of riding the coattails and getting involved with them. These are some of the biggest and baddest operators in the space. Like, learn from them, invest with them. You'll make great money. You don't have to do anything. Like, I just, unless you are fully 100% pot committed and have all the time and energy in the world to go run a storage facility in your backyard, it's tough to buy that first facility anymore for $1 million and be competitive in today's landscape. Obviously, there's a size. If you're able to buy a $2-3 million deal and staff it with a third-party firm, and you can afford that for your first entrance, fine, by all means. But I think for the average, let's call it country club investor looking to drop $250K in the space, it's challenging. It's not impossible, but it's really challenging because there are guys who literally spend their entire day and have teams and droves of people trying to find deals day in, day out. And so, like, and not to be negative, like, what do you think gives you the advantage who's kind of doing this part-time after you get in from work, trying to find a deal or two here and there? It's very tough. But again, for what you're looking for, like, a lot of these firms, they'll give you a 1.5x multiple in 5 years, and you'll get an 8% pref, and you'll get write-offs along the way. I mean, there's so many good vehicles out there. So it's like, how much better do you think you can do on your own? And what's your opportunity cost to do that? And I would say that for any major real estate class, like, invest with someone, figure it out, see if you love it. And if you don't, then you haven't killed all your time and energy. Now, if you love it and you're like, this is all I want to do, then great. Then maybe in a couple of years you go do it yourself. But I think it's a great way to learn, great way to grease the skids, and would absolutely recommend it to anyone.
Yeah.
I think that's super helpful, especially as people are looking at getting in. Another thing that comes to mind is, you mentioned there's a lot of people starting podcasts. They are claiming to be experts. Yep. We are going to hold you out, Mr. Jedi Master, as the expert. What's some bad advice you hear out there circulating around, specifically on storage, that you're like, oh, guys, don't fall for it?
Yeah, I think some of the worst we saw was, I don't think it was intentional, but it was off a short-term trend that we saw, is a lot of people in 21 were modeling deals. Like, 19 and 20, we saw people just raising street rates, just 10%, 10%, 10%, just push. And their models would show that they were going to raise street rates in perpetuity over the next 5 years. And they were going to have this awesome 3% debt and life was going to be good. I'm like, yeah, your model works if you can do that. But what happened was street rates not only stagnated, but they declined in a lot of markets by 20, 30%. And, your 3% rate is now 9%. And your debt coverage is 0.8 and you owe more money on the deal than what you're into it. Like, I mean, we've seen a lot of those. It's brutal. And so I think it goes back to my core things, like, don't treat this like a 10x investment. Like, be conservative, be respectful of the power of debt and what you're taking out there. partner with the right group for management, ensure that you're doing the right things to run your business properly. If it sounds too good to be true, it probably is. Yeah, I mean, I think all of that reigns true in this space. And I would also ask for track record. That's probably the biggest thing is a lot of guys are like, oh, I was able to buy this deal at this, but like you haven't had an exit yet. Like, how's your portfolio currently performing? Like, there's a lot of people that can make it sound real good, but what does it actually look like? And have they seen some exits through? Because I've seen a couple people who are large on social media where we've gone to look at their deals and it's worth less than what they bought it for. And I'm just like, I'm not going to say a name, but it's just like, oh, this is what it is. It's, maybe what they're preaching and what their stores are doing are two different things. And so I just tell people, ask for the track record. What's proof in the pudding here? I want to see how your projects that you're doing now and how they're performing, not the stuff you bought in 2018, because we all know those are worth more than what you bought them for then. But how's your 21 stuff doing? I think that's really where the deals are going to come true now.
Yeah, that's a helpful corrective. And previous to that, too, really good advice. I appreciate the sort of counterbalance and the encouragement of, hey, if you're looking at getting into these deals for the first time, there's some really great groups and REITs and things that you can invest in and be part of, learn the ropes, and probably get just as good, if not a better return. So I think that's awesome for our listeners to consider. Kind of thinking now on switching gears a bit just to your own business, your own growth. I mean, we started talking about, the international growth, the way that you've seen things kind of explode and now being in a different stage of life too than you were in your 20s. I am curious what the future looks like for you as you have a more refined vision of the business. And because so many of our listeners are entrepreneurs, they are leading businesses, they're trying to get out of the place where they're constantly working in it, having to be the face of everything, and instead trying to step back, build systems, work on it. I'm curious what that process has looked like for you and what it looks like going forward.
No, it's a great question. And I think through my 20s, I burned the candle on both ends. I stay up late, get up early. Someone says jump, I say how high. I was just, and there is a little bit of that. Like, you need to do certain things like that in growing your business. You take any deal you can get. That big client finally calls you and then, can you be here tomorrow? Like, yeah, absolutely. I'll drive 6 hours at 5 a.m. to be there, and things like that. But I think I set that as my norm for too long. And I really hit a point over the past couple of years, like, this just isn't sustainable. It doesn't align with what I want as a person and where my core values are. And I've always been big on fitness and mental health and well-being. And I just realized, I was like, this is so unsustainable, the course I'm going on. And I still, I wasn't neglecting my workouts or my family or this, but I just saw my calendar was no gaps from 4 a.m. to 8 p.m. And it's just like, this is not good. Like, I've seen, too many people drop dead of the heart attack at 40 that just haven't got to enjoy their lives. And I'm like, there's a point where it's like, for what? Like, what are you doing this for? And the reason I started this company was to have a balance in life and enjoy it. And I wasn't, and although I was doing a lot, I don't think I was doing a lot of it very well. I was like, all my burners were on like a 6 and not an 8 or a 9, So I think something I've really tried to do is, especially with a child now, is be more mindful about, like, hey, we shut down at a certain time every night. And if I get it done before then, great. If I don't, well, that's okay. I'll get to it tomorrow. And, I prioritize my workouts and my well-being and my family. And I just think that it's something that I've really learned has been really cool. And, getting older and people have kids, but also too, like, through COVID, I think people just realize, like, there's a lot more to just being that face value in the company. Like, oh, everything's fine, everything's perfect. Like, no, it's just not all the time. And that's okay. And I will say it's been really cool to see, I feel like, a rise in, our generation or in business and period, like, people being really open about prioritizing their health and wellness and mental well-being. And it's something that hasn't been at the focus beforehand. And I think people are just a little more open and in tune with being mindful of who's around them and how to ensure that everyone's here for a long time and not just, pumping out deals and gone the next day. Because right now especially the kid, it's all about longevity. And it's like, hey, I want to enjoy this ride and give back. And something that I've really noticed over the past, I'd say 24 months of trying to be intentful about this is my days are shorter, but I have more output out of them than ever. And I think
that.
it's when you condense your days and you start to set personal boundaries and you tell people no, but for the right reasons, you get so much more out of your time.
Yeah.
And I think that was probably one of the hardest things because I'm a yes guy. I'm a big people pleaser. I like my clients being happy. I like my family being happy. I like my friends being happy. But there's just a point where like it's okay to be a little selfish for the right reasons. I caveat that. That's a huge, huge point there. And especially like having a daughter the last year, like I said no to more things than I ever have in the past and like totally cool with that. And it's like, you know what, this is a special chapter in my life. And if people don't understand or don't want to be respectful of time that I dedicate to my family, then I probably don't want to do business with them, or I probably don't need them in my life. And that's cool with me. I'm totally cool with that. And, you know, too, like I've had people disrespect my team members. We don't work with them anymore. Like I don't care. Like I have very little time for that. There's hundreds of great people that I've worked with over the years. And I've been so blessed. I'm still friends with most of my clients. I've gone on hunting and fishing trips with them. I've been at their weddings. They've been at my wedding. We've done all these great things. So every now and then when I get one of those clients, just cut them loose. It's just not worth it, you know? And I'm sure we've all heard a version of like the 80-20 rule, but like so true. Like get rid of all the time suckers, all the naysayers. Like it's not worth it at the end of the day. Or, you know, you look at like Dan Sullivan, like 10X is faster than 2X and all those guys. Like, yeah, some of it's a little corny, but like it holds a lot of weight to it at the end of the day. When you look at its like core principle, it's like really put your time and energy where it matters most to you, and the rest will certainly fall into place.
I think that's super helpful, especially with the hustle culture that we have today. There's this mindset that you just need to grind. In probing and maybe poking a little bit deeper here, I am curious because one question Nick and I talk a lot about, and I think our listeners want to hear is it possible to get where you are without losing your soul, without there was that age and that season of grinding. Do you look back and say, I had to do that and I recognized it was the sacrifice and it's been worthwhile? Or is there you said it a minute ago, maybe I probably should have put up some of the boundaries and been more efficient earlier on. What's your thoughts on that?
Hindsight's 2020. You know, yeah, sure. I probably should have put them up sooner and this and that, but I will say I appreciate it more now having gone through it and being pushed beyond my comfort limits. I've retracted and I appreciate that a lot more now. There's a little bit of pain through the growth, which I think is necessary, but I think more than ever in today's social media hustle culture, we can all agree like 98% of it is just absolute BS. Like it's just totally like and again, I'm not saying those guys don't work hard, but they spend more time editing the videos to make it look like they work hard than they actually do. Like, guess what? They all watch Netflix. They all probably have beer every now and then. They skip a workout. They eat the McDonald's. Like, I don't care what they say. Like, we're all human. Like, it's fine. You know, but I will say the flip side of that is like, you can't like outwork a bad diet. You can't outwork a bad habit. Like, you still have to go to the gym 5 days a week if you want to be in good shape. Like, I'm not taking that away from them, but I think what more than anything that I've realized, I think COVID showed a lot of this with people working from home and stuff, is like we got to see people with their imperfections. Like, hey, you know, it's okay for us to do a video call to the client when I'm in a sweatshirt and a ball cap, because this is what I'm actually like 98% of the time out of the office. Yeah. Like, hey, you know what? I actually skipped a workout today and I went to McDonald's because I wasn't feeling great and had a real crappy morning. That's okay. Like, that's really okay if you do it every now and then. And I think showing just this, like, I wish people would show a little more of the real side, like than just this, like, oh, I'm hustle and grind and perfect 24/7. Cause like, I think the biggest thing I've realized, like, no one is, and like, no one has life figured out, and they may seem like superior to you because they're like 55 and they have a job, but like everyone's dealing with their own thing, and what may be scary to you is easy to them, and vice versa. And like, whether it's home or health or business, or like, everyone has insecurities, everyone has issues. And I think just like accepting that and being okay with that, and like if you got a higher power, putting in faith in that and trusting in the process. And like, as long as you're putting your eggs in the baskets that fulfill your life to the most, like everything will fall into place. And I think that's something that like I've really tried to do is just, it's a let go and let God. That's just kind of like been my motto the past couple of years. And I just, you can't control anything. And I personally, I don't have control of anything at the end of the day. So I'm just along for the journey. So it's, but I think it's just giving people a little more grace and acceptance through this process. I think that's the biggest thing I would take from that.
Yeah, I love that, man. And I think, there's so much help because I think any entrepreneur that's especially in the early phases of getting their business up and running, it just feels like you're just trying to keep your head above water for the first couple years. And, but recognizing tendencies within yourself, whether it's people pleasing or whether it is just being able to work yourself down to the bone, grind. I think that's half the battle is just realizing what those things are. And then, as soon as you can get to the point in your business where you're able to bring on help, take the scary dive of delegating tasks to somebody else. I mean, those can all be difficult things. I know we're running short on time here. We do have our golden nugget round. I'd love to hit you with some of those questions. So Nick, you want to take it away, man?
Yeah, absolutely. And we've covered, I think, a few of these already. But, this part of the show, we love diving in just to really, what's the heart? What's the why? What's the driver? Because, I think we recognized with a lot of the guests we have on, there's that moment of, hey, I could just take my ball and go home. I could just go hang out on the beach and be done. But you're still going. And not only are you going, but you're going internationally. So
going big.
That's right, man. You're going big. So let's dive in here. First one, and we've, again, hit a few of these, but we talk a lot about the 5 F's of abundant journey. We got family, faith, fitness, finance, and future. What's one of those that you're really focused on here for the rest of the year and looking forward?
Yeah, I mean, family's top of mind right now. It's like I said, I got a 1-year-old upstairs. You might have heard her crying a little bit. She was woken from a nap. My dad was so present with me as a kid, and I'm so thankful and grateful for that opportunity. And I just want to pour everything I have into her. That's my number one focus through the end of the year for sure.
Love it. That's awesome. Next one here. Why is it important to have an abundance mindset versus scarcity mindset?
Yeah, I think if you don't open yourself up to the possibility, like you'll never get there. It's like they say, shoot for the stars. Even if you fail, you land on the moon. Like if you aim at the moon, you fall short. Like you're never going to make it there. So I think it's just knowing that you are capable of it. I tell everyone, I'm like, if you gave me 5 years and the resources to have a PGA Tour pro every single day working 8 hours a day, I'm sure at some point I could probably make the tour. But it's, where are you going to delegate your time and energy along that process? Like, you have to have your mind even open to that thought, or else you'll just never get there. If you keep telling yourself you're not capable of it, you're 100% right. So might as well learn to just think big and shoot for it at the end of the day.
It's great. And you guys, unintentionally have shot big as you continue to grow. So it's exciting and the journey's great. Speaking of journey, do you find yourself being a journey or a destination person? And how has that impacted where you guys are at today?
100% journey. I love the grind. I'm a doer. Like I can't sit still. Like I check one box, I'm on to the next. Like half my battle is like winning the deal. And then like by the time it closes, I'm like, I'm already on to like the next one mentally. Yeah. Like I love like just that win and the grind and like kind of, I think it's why I like fitness so much. Like I like going to that deep, dark place. Like I like getting there and I like coming out on the other side. Whether it's speaking or doing some huge deal or whatever, I like being scared a little bit. Like it's good. No one wants to look back and be like, my life resume sucks. Like, and you know what? I tell people all the time, like, if you fail, like, who cares? Like everyone's messed up at some point. Like it's, you don't go into that intention, but like, no one died. Like, so whatever. So you bombed it a little bit or you messed up. Well, you do better next time. Like, I'd rather look back and say I tried than sit on the sidelines and watch someone else do it.
Yeah. Good word there. Last one for you. What's a dream or goal that you have that you've not been able to make happen yet? I want to do a $100 million brokerage transaction. So
That's
Let's
a big
go.
one for me. Gotta check that box. We've come close, but I need to check that box. That's a selfish me goal. I gotta knock
love
that
that goal.
So,
That's fantastic.
Yep. So now we're cruising. I'm never thought we'd be where we are. Thrilled to be where we are, but I'm even more excited about the next 10 years, what's in front of us.
I love it, man. Well, this has been so great to be able to connect with you. I know that you've got a book out on the sexy side of self-storage. It's one that I'm planning to pick up. But where are the best places for people to connect with you or to follow along, connect with the brokerage? Where would you like listeners to go?
Yep. I'm on Twitter, on LinkedIn. You can follow us. You can get our book on Amazon. And you can also reach out to me, John at lindsayselfstoragegroup.com. If you're international, I'm on WhatsApp. You can hit me up. Would love to connect and look forward to helping anyone in the storage journey.
Amazing. That's so solid, man. Well, listeners, you'll find links to all of those in the show notes down below. John Lindsey, everybody, thank you so much for your time, man. This has been great.
Thanks for having us, guys. Really appreciate it.
All right, everybody. We'll see you next time.